Good afternoon, everyone. Today is Friday, October 28th. I'm Matt Krajna, Co-Chief Investment Officer at Nottingham Advisors, and welcome to our weekly Market Minute. For this week, wanted to quickly recap earnings season at a high level. Up until today, we've had about half the S&P 500 report earnings so far for the third quarter, and by and large, they've come in better than expectations. Coming into the quarter, there were a lot of concerns over whether the economy was heading into a recession, whether we were going to see earnings fall off a cliff, and really what the state of demand was from the consumer as given to us by those companies reporting earnings this week, last week, and those yet to come. And so taken on balance, earnings have been widely positive. They've been pretty resilient. Consumers have been pretty strong. We've heard that from the banks. We've heard spending is up from the credit card companies. And we've heard companies have pricing power and consumers are still willing to pay those higher prices in the face of rising inflation. And largely after this week, we've gotten through kind of the big companies in the index, the big tech companies that largely reported earnings that were underwhelming, to say the least. We've seen impact from Google, Facebook, and Amazon all had pretty negative earnings announcements. Even Microsoft's was pretty negative, with Apple being kind of the lone green light in today's market. But I think more importantly is the markets are on pace at current time to finish the week in positive territory. So despite four of the top five biggest companies in the world reporting negative earnings, falling double digits on the week, the Nasdaq's actually focused right now and turning positive for the week. The S&P is turning positive for the week. But taken in a different light, it's really been value that's led the week higher, and it's really been the small cap space. So that rotation out of technology into other corners of the market, out of large cap into small cap, out of growth into value. Those have been the trades that really are working this week to the tune of significant outperformance over the market. So when you think about kind of this rotation that's happening under the surface, we are definitely seeing a rotation out of some of these areas of the market that were higher valuation, were higher flying during the pandemic. Even those that have been hit the hardest this year, we're still seeing rotation out of those sectors into more small cap, mid cap, value driven parts of the market with pricing power, more durable earnings, and a little bit more focus on cash flow today. So that's our market minute for the week. Sorry if that was about 2 minutes this week, but we'll be back in touch soon with a further recap on Q3 earnings.